This meeting is being recorded.
Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with Taylor from Life Goal Investments. How you doing, buddy?
Doing great. Thanks so much for having me.
Absolutely. I don't know if you saw it. Hopefully you did. Uber's CEO was out parading around Wall Street trying to see what's going on over the weekend. And he put out a note to his employees, which quickly got leaked, that basically said investors' risk appetite has changed. They are only going to pay for earnings, no longer revenue. We have got to run a tighter ship. We are going to treat hiring as a privilege. We are going to whack marketing spend. And this isn't about Uber per se, to me, because living in the Valley, this is about Uber sending a signal to every single public and private tech company that you better get your ass in front of your burn rate, because the money is not there. Burn rate, burn rate, burn rate. And there's going to be a lot of companies that go bust because they didn't control it. What do you think?
Belt and suspenders, like tighten down the belt, right? I mean, yeah. to your point of like, the difference between revenue and earnings is what you're spending. There's only two sides to the equation, your household budget, and two sides to the equation, any business's budget. There's your revenue on one side and there's your expenses on the other side. And if one is struggling versus the other, it's got to be corrected. So their revenue is high generally because they obviously are out there and there's a million Uber cars running around picking up people at the end of the day, but they're not controlling the other side of the equation very well right now. They're spending too much money for growth to box out competition like Lyft, et cetera. And it's a time where, to your point, I hate doing this because I sound like a broken record, but it all falls back on the Fed.
Yeah.
Where if they can't go out and finance debt cheaply, their business operation doesn't work. So as the Fed raises rates, the cost of financing goes up, and therefore their profitability just gets squeezed and squeezed and squeezed. And if they're not profitable to begin with, it just gets more and more negative on the other side.
Yeah. So again, I don't think this is really an Uber comment. This is, again, a comment for every non-profitable company, public or private. There's a lot of companies in the Valley that have been focused on revenue and kind of grow at any cost. And, it works when risk is zero. It works when you can finance anything. It's not. So I expect a lot of tech companies and non-profitable companies, public and private, to do what Uber said. And frankly, Facebook and others, where they're going to freeze hiring. I've told people that a recession's coming for months, and the first thing they should do is get a part of mainline versus new businesses, right? I worked in software, right? There's always these new software ideas where they take a few people and go, hey, go try that.
Yep.
This is not that time to be there. Go get part of core. You want to be close to revenue, not some new idea that you can just whack the entire unit.
Well, you sound a lot like Warren Buffett as you make these comments, right? Seriously. I mean, like the more boring right now is not the worst thing in the world. Barron's wrote an article this weekend on him. This is gold. This is the best Warren Buffett stat I've ever heard, bar none. Bar none. If you go back to 1965 and look at when he took over Berkshire Hathaway, and you look at the stock price till today, if the stock price Berkshire A were to lose 99% of its value today, he still would have outperformed after that 99% drop, the S&P 500 since he started in 1965.
Wow.
I'll reiterate that if that because my mind was absolutely blown when I heard that stat. So again, if Berkshire A, his company lost 99% of its value today, he would still have outperformed the S&P 500 per year since 1965 when he started.
Yeah, and again, the beauty of Warren Buffett is he doesn't get emotional, right? I've now seen him 2 or 3 times be called an idiot and a moron by a fly-by-night investor who got lucky on timing.
Yeah.
And David Portnoy, getting your ass handed to you, buddy. Because you didn't realize you got lucky.
Yeah. To our point in one of the prior episodes, like growth stocks, it didn't matter what you were buying in a growth stock market. And this is the same conversation we're having right now with these companies, Ubers, et cetera. It doesn't matter what it was. When the Fed holds rates at zero, it gives all of these a lifeline to say, hey, I can grow at any cost and explode. And at some point I'll become profitable, and then people will be willing to pay for
I'll
it.
catch I'll get escape velocity, and I too will be Amazon or whatever, right?
Yeah. One of the few market penetration strategies where you come in and you actually lose money consistently.
Mhm.
But Jeff Bezos is also a wizard that most folks aren't. Not.
Exactly. Yeah, this is risk is being repriced. Recession, just again, recessions are self-fulfilling sometimes. I stand by my idea that this summer is going to be the last blowout, right? We're going to finally can travel the world. Masks aren't everywhere. I think a lot of people are going to go have one more party, and then the consumer retreats, which is, I don't have a lot of rosy pictures about our economy for the next 18 months.
I'm quicker than you on the recession talk.
Yeah.
We've discussed this. I think that the Fed is not able to raise rates as much as what the market's saying right now. And they're going to have to be less aggressive, and they're still going to break it.
Yeah.
They're still going to break the economy. What I'm getting at there is they're going to raise rates, but the economy is slowing enough at this point already that they're going to raise rates and break it and break the economy, force us into recession more quickly. You agree. You just think it's going to happen a little bit later because you agree in the strength of the labor market.
Yeah,
which is a valid argument.
Yeah, it's but that could turn on a heartbeat, right? You get more Ubers. That I don't know what. So again, company A, they were hiring 100 people a month, and you know what? Suddenly they hire 5, and then you have all these other tech companies cutting heads. It could get bad.
How do you continue to hire at a fast rate when you see inflation, the cost of hiring that person going up, and the productivity of that person going down? So workers right now are being less productive than they've been in 40 years, and they're costing more. How does a company afford to do that?
Well,
unless they're just passing through this exorbitant cost to the end consumer. And at some point, the end consumer can't afford it, and this economic flywheel stops turning. And that's called a recession.
Yeah, I can already hear all the bosses, right? I was a second level guy when I left, and I can already hear the screaming for get your ass back in the office.
Yeah. What year are you talking here?
When you mean? I think it's going to happen. I think right now they're going to start screaming, get your ass back in the office for stay at home.
I thought you were talking about a realistic time in your past when you were hearing that. I'm talking about like what year. I got you.
No.
Yeah, no,
right now.
Agree. Yeah.
People, if you're a boss or a second line guy and you're running, you have a budget and all this, and you see your people being less productive, one of two things are going to happen. First, you're going to try to scream everybody to get back because you lose that inertia of people being productive together. Otherwise, you're going to say, guys, I'm going to have to start whacking people. There's not enough work. This is why better.com and all these other people are whacking heads. There's not enough work.
Do people get drawn back into the office?
I think they do. Yeah.
Yeah.
Again, this is all part of the process. So right now, the labor has all the power. Right now, you've got to have 17 flavors of popcorn and 17 different things of soda and all that other freaking nonsense to get people there. Unions are growing. Apple, Amazon, all these other,
Starbucks,
labors have the power. Recession kicks on, unemployment doubles, people get scared. They suddenly run back to the office because they don't want to be laid off.
Yeah,
that's where we're going.
I totally agree. And I think that, the up for debate conversation that everyone wants to have is whether back in the office works better or working at home is more productive. And I think this is getting called into question right now. And I think that when things get tight, bosses want people they can see what they're doing.
Absolutely. And I've had to make layoffs. I've had to make layoffs before. I've had a spreadsheet. I was in a boardroom, a spreadsheet. I think I had 50 people in my purview, and I was told I had to let 12 go.
Yikes. 24%, a quarter of your workforce.
Yeah. Guess who got, tough. The people that got let go are the people I didn't see every day.
Yeah. Yeah. So, yeah. And that's the thing is like, again, people can argue from productivity from home and you're not sitting in the car going to and from, but at the end of the day, if you're not in the eye of someone that's making a decision and someone else is, and they can see that they are working, it's a tough argument to make there.
Yeah, it's coming. And again, labor's going to, that's why I think this pushes to next year. Cause I think labor has enough power, enough inertia. We're still 3.6% unemployment. I don't think this gets gnarly until it's 7. I just don't see it I just think there's so much momentum. I don't know. At this point, I hope I'm wrong, because the sooner we break this goddamn thing, the sooner we come back together. I mean, really, it's gonna break. Is it break in Q3 or is it break in Q2 next year? I would rather it break early than later. I don't see it. I don't see it.
Yeah. Yeah. We'll see. Up for debate. Again, I'm on the side of it breaking earlier and then not being able to raise rates as high. And my side also likely comes with a little bit more of a mundane, mild recession than yours. If it stays hot, they crank rates higher. That'll get uglier. It's weird to say that if things are worse now, then the recession might not be as bad. But if things
absolutely.
are better now, it could be worse.
Exactly.
Good news is bad news. Welcome to Economics 101.
Yeah, that's funny because we both see it the same way, and I hope you're right, because I would really like it to be not as bad. I just think.
And by the way, neither one of us have changed our tune either.
No,
since the beginning of our conversations. We both have been in the same camp. It's and you know what'll probably happen? It'll probably land somewhere between the two.
It'll be in the middle, yeah.
Hopefully both of us don't just come out looking like morons and we're totally wrong. But
yeah.
Well, actually, you know what? That might be okay because we're calling for a recession.
Yeah, it'd be okay. Yeah, if the Fed gets lucky and lands this thing softly, more power to them. So two more questions as we round this up. Do you think we get 50 basis in June and July? Or do you think they wimp out in July?
Yes, I do think they probably go 50-50.
Okay.
And I have moved on that. Moved on that. I did not think they were going to be able to get as many as quickly. But I do think you probably get two more 50-50.
And then they break.
And then they break. Yep.
Then they pause.
Yep,
okay.
That's my thought process. Yeah.
Do you think we are in a recession today, meaning that the Q2 GDP print will be negative, or do you think that was an aberration in Q1?
I think it was an aberration, but I think you're going to see slowing GDP growth from trend line last year, if you will.
So, but not negative.
Yeah, I think we probably get a positive GDP print. Correct.
Yeah, I think so.
And me saying that we're going to see slowing from last year, like that's a stupid comment on my part. Obviously, we're going to see slowing.
Yeah, genius. Good move.
Yeah. But I do think that the accounting mechanism that takes place there, with inventory restocking is probably it was a big part of a recession, but nonetheless, it's coming. I do think we get yeah,
it's coming. All right, Taylor, where can people find you? Because you put out some amazing stuff, folks. If you're not following him, he just put out a IG post about Cathie Wood being the the opposite
You're good. Yep.
Of a diversified investor. I thought that post was awesome. Well done.
Thanks so much. Yeah, follow us at Life Goal Investments. We put out something on Instagram. We put out something daily. Generally, it's broad market stuff. It doesn't have anything to do with our company. It just talks about economics and markets and just rules of thumb.
Yeah. Cathie Wood up 157%. Down this, down that. Not good. Not good. Thanks, Taylor.
That's not diversification.
Not diversification.